Dogecoin looks like it found support at this trend line that I was watching right here. We had support giving me a trend line going to the upside. I was in my last video, I was watching this little downtrend right here. I was thinking that if we break this trend line going to the downside, then I'll be targeting 139, or I'll be get more confident on my limit order that I have at 139 and 154. We had some okay, so here's the other thing that I was looking at. We had resistance, support. We're basically in a channel pattern. Right here we got resistance and got sent to the downside instead of pushing to the upside, and that's what kind of got me a little skeptical. And then also, if we go to the 1 hour time frame, I was watching this pattern, or this trend line right here. We had support giving me a trend line going to the upside. We started going straight. We broke that going to the downside. First clue of, a downside. And then we started testing this trend line right here. I think what we really have to do is, or what really has to happen for me to hit that target is it has to break this trend line first. I thought we were breaking it, and I was saying in my last video, I want to see the candle close, not just get a wick. We basically just got that wick, and then the next candle closed above it. It looks like we're still trending above it, but we have resistance right here and resistance right here. If you want to use the bodies, or if you want to use the wicks, gives you a trend line like going like this. If we break this trend line going to the upside, then I'll be much less confident on this target down here. I think we do have to break the .156 basically .156 level, and then up here is .159339, which is the top. I think if we could break up there, then we could start looking at this next Fibonacci retracement level, or the 17-cent level. The Fibonacci retracement level is sitting at .17362. That 17-cent level is also giving us trouble though. But yeah, I'm still looking at this limit order down here at .139. To be honest, just because we got resistance. We're basically in a triangle pattern right now. I'm waiting for a breakout. This little triangle right here. Boom, boom. Waiting for a breakout to the upside or to the downside. If we break out to the upside, then we can continue in this channel pattern going to the upside, just basically crawling up, trending up. But if we break this going to the downside, we can start looking at the previous resistances and the Fibonacci retracement levels. I'm really looking at this level at 139 down here because of the Fibonacci retracement level from the bottom, this big huge run, top to the huge run, Fibonacci retracement tool, drag from the bottom to the top, and then that gives me that, what is it, the 61% level right here. I like watching the 50% and the 61%. Yeah, so let's see if came down, hit that once, came up, hit this target, not the target, but pretty much the 50%. You could use them as targets at 15652. We came up, hit that a couple of times, and then that's another reason why I'm thinking maybe we might be going down, because we've already tested this area a while and it looks like we're kind of losing some steam. The other thing I wanted to bring to your attention is the declining volume. Right now the volume's just been declining. We're basically trending up while the volume is going down, and that is actually a bearish divergence. It might have already taken care of itself just going sideways right here. But until the volume starts picking up, then I wouldn't be surprised if that'd be another reason why it could also come down, and maybe the red volume will start coming in because people aren't buying it as much. So yeah, those are the main things that I'm watching right now. What else? I guess the daily 9 moving average is another thing I wanted to say. It actually looks kind of decent right now, and in the last video I was talking about how the 9 moving okay, so I'm watching this 9 moving average right here. And then the last video I was talking about how it was kind of like going like almost down, like this little area right here, it was almost down. Now it's like kind of sideways, but this one's actually pointing up. So that's, that could be a good sign that it's not going straight or pointing down like this one was. So let's see what happens. Like I said though, the daily 9 moving average has been the price has been going in and out of the 9 moving average right there. So it's possible that you know, it could come down and break through it again. I think what we're really watching as far as moving averages go, though, is the weekly 9 moving average. Let's go ahead and clear everything out. It's actually so we're looking at this blue line right here. I actually can't mark it or else all that stuff will come back. But yeah, so we're looking at the blue line. We are under it right now. Sorry. So basically we're under it on the weekly weekly time frame. This level is sitting right around 17 cents. So if we could break that 17, it's like I've been saying, if we could break that 17 cents level, then maybe we can get a big, huge candle like this, possibly. Or yeah, I mean, that's basically what I'm kind of thinking. We've been getting on the resistance on this 9 moving average. Like I talk about, it's better to be on top of it so we can get support on it and bounce on top of it, as opposed to being under it and getting resistance to it every time we come into it. Let's see what happens now. It looks like we're kind of straightening out. I've been kind of bullish on this for a while, but like I said, we just kind of, let's go ahead and bring back all this stuff. Like I said, we've been kind of having trouble in this area. So, I guess we could talk about that inverse head and shoulders real quick on the daily, see what that looks like still. There's a bunch of stuff on this chart. Let's go ahead and go to a different chart. Okay, so we're on Binance right now. Let's go ahead and clear everything out. We had resistance. I was looking at this possible inverse head and shoulders. We haven't really completed it yet, though. It's still not impossible. I mean, it still kind of looks like it's still possible to form it. If we came and shot up, or even if we just crawled up, I guess, technically we would still be forming a shoulder pattern, head, another shoulder. We do have to come up to this line, though, and then break it for that pattern to finish. So we would, and then if we broke this trend line going to the upside, it would be dragging from the bottom to the top, something like this. This is the conservative target using just the bodies, and this is sitting at around 0.19644. But if we be more liberal about it and use the wicks all the way from the bottom to the top, something like this, and then we'll drag this over here, maybe something like that, and then drag that to there, and then this would actually, if we used the wicks as the top, or the line that we would have to break, the pattern. I don't really love that, though, because, you know, the bottoms are over here. So let's actually drag that down a little bit. But basically, we'd be looking for that line. Once we break that, this would be the more liberal target. Like I was saying, it'd be the wicks. And this puts us at around 216. I think, in general, once we break out of this resistance, though, then we can look at these next previous resistances, sitting at .202 and .220, and then if we could break higher than that, we've been looking at this Fibonacci retracement chart from that started. Oh no, that's not it. I mean, technically, yeah, though. Let's see, if we do the Fibonacci retracement chart, this is the big one. If we did something like this and we were able to break out of this Fibonacci retracement level, or this box, then in general we could start setting new highs, and we would have to just kind of follow the trends and see where that takes us. But if we could break out of this box higher, I mean, that'd be all-time highs pretty much. No, not all-time highs. What am I talking about? Just in this area, and then we could start looking at these next. Then we'd be breaking out and be looking at these next levels sitting at around 30 cents, 31 cents, 45 cents, and so on. I kind of did a inverse Fibonacci retracement the other day on my last video, something like that, and we could be looking at, I mean, I don't know, 39 cents, 31 cents. We'd also be looking at these previous tops over here if we were able to actually break out of this little box here. But until then, we're just gonna have to wait and see. Like I said, I don't know, I kind of still wanted to go to back down to .139 and then bounce out, but I don't know, it's kind of hard letting go of that 139 position, because I thought that was a really good position, but it looks like we've been kind of stalling out in this area. I'm kind of thinking maybe we could go back to that level. Let's see what happens, though. Let me know what you guys think. If you guys like the video, hit that thumbs up, and if you want to watch the last video, check it out right here, and I'll see you in the next one.